The United States and China have sought to end their trade war for now by agreeing to dramatically slash the tariffs they imposed on each other's goods. The development follows a successful round of talks in Switzerland at the weekend.
The U.S. and China agree to slash tariffs for 90 days in a major trade breakthrough. Both sides have agreed to bring reciprocal tariffs down to 10%. This deal coming after U.S. and China trade representatives held very high-stakes talks in Switzerland over the weekend.
After years of tension and tit-for-tat trade barriers, the United States and China have finally stepped back, at least temporarily. In a surprise but cautious development, both economic giants have agreed to ease tariffs on each other's goods for a 90-day period. This ceasefire, while limited in duration,
and in today's breakthrough, both sides agreed to lower levies by 115% for a 90-day period as negotiations continue. U.S. Treasury Secretary Scott Bessent said both sides saw the need for trade between the two powers to continue.
Offers a sliver of optimism in a trade relationship that has been marred by escalating conflicts, political posturing, and global economic consequences. The deal, which was announced after marathon negotiations in Geneva, is not a final resolution. Instead, it's a gesture, an opening to reset, rethink, and possibly rebuild. For now, both sides have agreed to suspend the implementation of new tariffs and temporarily roll back selected existing ones. In exchange, they've promised to engage in more intense and frequent negotiations, with the goal of striking a more comprehensive trade agreement before the 90-day window closes. For businesses, manufacturers, and consumers around the globe, this pause could not come soon enough.
We come to agreement that our reciprocal tariff rate will go down to 10% on the United States side, so it goes down 115%. We enter into a 90-day pause period for negotiations, which both the Chinese and the United States are very committed to, and the Chinese on their side also go down 115% to 10%, and they remove the countermeasures that they have in place. To be very clear, other measures that the United States has put in place in the past, whether it's tariff measures from 2018 or since, tariffs under other statutory authorities, tariff rate to fentanyl, those remain unchanged for now to the side. I'll just make one point, is that both the Chinese and the United States agreed to work constructively together on fentanyl, and there's a positive path forward there as well.
The trade war, which reignited in late 2024, had already begun to disrupt supply chains, raise costs, and inject new uncertainty into an already fragile global economy. Companies that had been struggling with sudden shifts in sourcing, pricing, and logistics are now cautiously optimistic that some relief is on the way. The latest wave of tariffs, imposed just weeks ago, had targeted Chinese electronics, solar panels, and critical minerals. The retaliatory measures from Beijing were swift, slapping heavy duties on American agricultural goods, semiconductors, and autos. It was a clear signal that neither side was backing down, but it also revealed the cost of continued confrontation. Behind the scenes, trade officials have been scrambling to find common ground. China, for its part, has been navigating a complex economic landscape. The country is still recovering from the aftershocks of its real estate crisis and ongoing shifts in global manufacturing dynamics. Beijing has been keen to prevent further damage to its export-driven industries, many of which were hit hard by American tariffs. Meanwhile, the U.S. is balancing its desire to be tough on China with the need to protect American jobs and keep inflation in check. So, what does this 90-day pause actually mean in practice?
Whether it's medicines, whether it's semiconductors, steel, the other, we've identified 5 or 6 strategic industries and supply chain vulnerabilities, and we will continue moving toward U.S. independence or reliable supplies from allies on those. But the consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that. We would like to see China open to more U.S. goods. We expect that as the negotiations proceed, that there will also be possibility of purchase agreements to pull what is our largest bilateral trade deficit into balance. That has gotten out of balance.
According to preliminary details, both sides will immediately suspend any new tariff hikes. In addition, the U.S. will roll back certain tariffs on Chinese electric vehicle components and solar cells, while China is expected to reduce duties on key U.S. agricultural exports, particularly soybeans, corn, and pork. These concessions are not permanent and can be reversed if talks break down, but they're a start. The agreement is also expected to kick off a new round of working group sessions on issues that go beyond tariffs, such as intellectual property, market access, technology transfers, and environmental standards. These are thorny topics that have derailed negotiations in the past, but officials from both sides say there's a renewed willingness to approach them with more flexibility and pragmatism. Interestingly, the 90-day timeline is not arbitrary. It aligns with several key political and economic milestones in both countries. For the U.S., it leads into a critical phase of the 2026 midterm election cycle, where the economy will be a central issue. For China, the period ends just ahead of a major Communist Party policy meeting where the country's economic direction will be debated. Both sides have incentives to show progress by then, or at least avoid fresh conflict. Despite the positive signals, experts warn that the road ahead is anything but smooth. Temporary relief is not the same as a long-term solution. Past ceasefires in the U.S., China trade war have often ended in disappointment.
They were very low. Most analysts had expected them to talk and then come out and announce more talks. Well, they have done that. There's a 90-day pause, and China has emphasised that there's going to be this economic and trade mechanism for talks in the future. So perhaps, this is more talks about talks about talks. But they've come out with an agreement to lower these tariffs, which seems like a significant de-escalation from where we were last week.
With old disputes resurfacing and talks collapsing over fundamental disagreements, trust remains fragile. Each side still accuses the other of unfair trade practices and geopolitical maneuvering. Moreover, while tariffs are the most visible symbol of the trade conflict, they are not the only source of friction. Technology competition, export controls, investment bans, and national security concerns continue to drive a wedge between the two nations. Even as trade negotiators work to resolve tariff-related issues, other departments in both governments are tightening rules on technology sharing, surveillance equipment, and AI chips. These parallel tracks of cooperation and confrontation define the complex U.S.-China relationship of today. Another layer of complication is the growing involvement of third-party nations and companies. Countries in Europe, Southeast Asia, and Latin America have found themselves caught in the crossfire of U.S.-China disputes, often having to pick sides or navigate shifting alliances. Global firms that operate across both markets have had to reconfigure their supply chains, hedge against currency fluctuations, and anticipate sudden regulatory shifts. The 90-day pause may offer a brief breather, but it doesn't remove these longer-term risks. Still, even a short-term pause can have ripple effects. In the stock markets, investors reacted positively to the announcement. Shares of manufacturing, shipping, and tech firms jumped as news of the tariff suspension spread. Commodity markets also saw movement, with soybean futures rising on hopes of resumed Chinese purchases. The business community, while cautious, largely welcomed the development. Consumer groups were also quick to respond. In both countries, tariff-related price hikes have been blamed for rising costs of everyday goods, from smartphones and laptops to household appliances and clothing. A suspension of tariffs could ease some of this pressure, although it may take weeks for any price drops to reach store shelves. In Washington, the announcement was met with mixed reactions. Supporters hailed it as a smart move to protect American interests without escalating conflict. Critics, however, accused the administration of being too soft on Beijing and questioned whether China would follow through on its commitments. Similar debates unfolded in Beijing, where some hardliners viewed the concessions as a potential sign of weakness. Both governments have emphasized that this is not a surrender or capitulation. Instead, they're framing it as a pragmatic step to avoid further economic pain. U.S. Trade Representative Catherine Tai called it a responsible pause, and emphasized the importance of continued dialogue. Her Chinese counterpart, Minister Wang Wentao, said the agreement was a chance to reset the tone of bilateral trade relations, though he stressed the need for mutual respect and fair treatment. As the 90 days tick away, much will depend on what happens behind closed doors. The next few weeks will be filled with intense discussions, technical reviews, and legal assessments. Both countries have set up dedicated negotiating teams, and additional meetings are already scheduled in Brussels and Singapore. Observers will be watching closely for signs of deeper progress or signs of collapse. In past negotiations, sticking points have included forced technology transfers, subsidies for state-owned enterprises, and dispute resolution mechanisms. If these core issues are not addressed in a meaningful way, the current pause may end up being just another missed opportunity. As the global economy hangs in the balance, we'll be following every twist and turn. So don't forget to subscribe for real-time updates and smart breakdowns of global trade tensions.